Hey guys, Randall Cornett here. I hope you guys are having a great day. Unfortunately, and I know this video is probably going to get killed in the algorithm because it's going to be pretty much a duplicate video. The last video I did, there was some sound issues that the way that my audio is routed, I couldn't pick that up. I couldn't hear it. So I'm having to refilm this video, but it's a good thing that I am because in my last video, I did talk about that there was no significant dark pool prints for the day. One did come in rather late, usually than what we see. So we will go over that. And I do have a frosty brew now too, because I wanted to really celebrate with you guys. I thought in the ultimate test of adversity that we've seen yet, I thought that we did really well in bouncing back. Obviously, I highlighted that in my other video today. But again, you guys should be really proud because this could have went one or two ways, in my opinion. We could have touched the low 30s, or we were going to bounce back strong, and we did. So cheers to you guys. Now let's get into the information, okay? So there was a 235,000 share dark block that came in pretty much to close out the day. It was an $11 million dark pool purchase. $47.95 was the price that they initiated that transaction. What that means for us, guys, you guys know how I feel about the dark pool. I think it's the main detractor from us actually seeing a squeeze. So I'm not happy that there's transactions going there. I would have loved to have seen that buying pressure in the lit markets, and who knows what the intent is. Again, though, it was a low price. This could be somebody going long. I just highly doubt it. I assume that we'll probably use that to attack us, but it's important that we know and we kind of see what's coming. So there wasn't, all in all, there wasn't that much activity in the dark pool today in terms of large prints, which is a good thing for us, and I think that's a small contributing factor to why we were kind of able to run up a little bit today. So that's overall pretty good news. If you want to look here at the most active calls here at the bottom left, you'll see AMC is here, which is nice. It's in the it's in the top 5. So happy about that. 206 active calls that came through today. So that leads me to my next topic, which was in the last video, is we're going to take a look at the options chain and kind of see what that's telling us. So right here, what we have is basically the option breakdown, and this is the volume by expiration, right? So you have the July 9th, July 16th, July 24th, and so on. So when we're looking at the volume for the July 9th basically volume for the July 9th contract, there was 843,000 volume in that today. Out of that volume, 55.7% of it was call activity, basically. So people purchasing calls. 44.3% of it was puts, and there was 153,000 trades executed today for this July 9th strike. And then so forth. If you want to look next week, we actually have on the 16th expiration, there was 289,000 volume in there. 59% of the volume on that expiration was call volume. 40.2% was put volume. So now I do want to highlight, though, just because, and this is something I really didn't touch on in the last video, but I think this serves it's a good time to talk about it. Certain calls don't always necessarily mean that they are bullish when you look at the actual flow of things. You want to pay attention to, was the contract purchase below bid, at the ask price, above the ask price? All of those things mean something. To give you an example of what a bullish option would be, let's see here. So on this option where my mouse is, so this was a call, July 9th expiration, $50. They put 21 grand in it. This AA at the end of these details right here, so this is 164 contracts at $1.33, right? So they actually purchased this contract above the ask, meaning that they paid more than they absolutely needed to. And the fact that it was a sweep order means that they can go to a bunch of different exchanges and get it filled. It's like getting it filled as quickly as possible. Hey, I'm willing to pay a little bit extra on this just because I need to get it filled, and I'm willing to go to a bunch of different brokers to get it done. So when you have that AA, that would be an option that would be considered, bullish flow. So now looking into the actual options chain a little bit more detailed on the open interest in. So today there was 452,000 open interest on the July 9th expiration. It's up 12,000 from yesterday. It's up 101,000 over the past 2 days, and it's up 192,000 over the last 3 days, right? And again, 59% of the options are call options, 40% of them are put for that July 9th. And then if you want to look at July 16th, kind of the same thing. 36,000 increase in open interest today, 50,000 yesterday, and plus 54,000 the day before, right? So looking strong, and that's looking good for us. There's obviously a lot of people piling in on the calls. On the 16th, not so much, right? There's 41% call, 59% puts, but that's on a day-to-day basis, right? So understand that. Now, moving past the actual, now if you want to, let's look at what the bullish and the, bearish options chain is looking like. So what's telling us the stock's going up, that's showing like bullish momentum, and what's showing us bearish momentum. So if we're looking at the current date total, let's just say for today, right, the 7th, so the trades that happened today, there was 165,000 contracts traded. 54% of them are basically marked as bullish, meaning like, hey, they were asked like above the ask. So there could be a bunch of different factors, but that's a main one. There was $42 million purchased in bullish contracts today. That was 56% of the total dollar amount that went into the stocks. So we're winning that battle, at least when it comes to on a day, like an intraday basis. 46% of the contracts are bearish, so we are winning that as well. And you'll actually see this trend through pretty much the whole entirety of June and like so forth, right? On the 6th, it was 60%. On the 2nd, it was 58% of the contracts are bullish. And if you want to look up here at the 5-day average, 59% of the contracts are bullish, 41% are bearish, and that's on the 5-day. And if you want to look at the 30-day, 63% of these contracts are bullish, 37% of them are bearish, $194 million on the 30-day average in terms of bullish contracts, right? So it's telling us, to me, this is obviously, bullish sentiment. I mean, the people are, the money that's looking like it's believing that it's going to go up, they're putting their money where their mouth is, right? And so I do want to highlight something, though, again, talking about what options mean and what they could look like. Is it bullish? Is it not? So certain things, right? So if you're looking, like, let's say if we look at this room highlighting at this $30 strike price, okay? And because of the open interest change, it's plus 24%. They're counting that as kind of abnormal. So they tag the indicator as a short buildup, right? And so, like, if you really want to look at what these mean, so like, what is a short buildup? A short buildup is an increase in open interest, but a decrease in implied volatility, suggesting the trades are selling more contracts on short positions in the option. So that's what I'm saying. So those which are not necessarily 100% going to be in our favor, right? So it's an increase in open interest, but a decrease in IV, suggesting that traders are selling more contracts on short positions in the option, right? So potentially it could help us on the delta hedging side of things, but at the end of the day, that's how it could be used. And that's really how sometimes you have to look at the different options. Now, another interesting one. So like, what are the ones that are suggesting short covering? So on this strike price, this is $62 on this call, okay? And what it means, short covering is a decrease in open interest. So that means that people are getting out of it, but an increase in implied volatility, suggesting that traders are buying back to cover short positions in the option. So we've seen a lot of those today, that's going to be positive moves for us. If we start seeing, if they're buying options so they can cover positions, obviously that's not 100% for fact what's happening. That's what this indicator is suggesting. But again, we will benefit from that. And then obviously you're seeing some open interest on these, let's say $80 here on these long buildups. And what does that mean? A long buildup is an increase in open interest along with an increase in implied volatility, indicating that traders are adding to long positions in the option. And then we're pretty much seeing a long buildup on everything below, all the way to $145 strike price, which is some big stuff. And then the opposite side of things, let's look at some of these puts that are puts, right, that are getting tagged as long liquidation. So here, we're seeing this $45 strike price on this side of things, on the put side, is suggesting long liquidation. So long liquidation happens when there's a decrease in open interest along with a decrease in implied volatility, indicating that traders are trying to sell out of their long positions in the option, right? So they're trying to get out of their long positions. But if you look back over here and you tie that into the short buildup, the short covering, I'm thinking this is a lot more of a hedge game, like a hedging game kind of going on in the stocks right now. And again, these are not for fact. I'm just bringing these up just to show you there's diversity in the way that the options work. And granted, we're only looking at this July 9th expiration. So if we want to go to let's go to September, for instance, when we'll see lots of long buildups, long buildup, long buildup, long buildup, only one short buildup. And so what I'm saying is they're playing these option games, which is stuff that you guys already all knew, right? You guys already knew this for with what's going on, but they definitely are playing the option game as well to try and manipulate the stock, get out of their positions, kind of work their game against us. But again, going back to the actual bullish side of things, 54% of the contracts still bullish today, looking absolutely strong. And at the end of the day, like I said, the reason why I even share this information is because I'm just trying to give you guys all the ammo so you can be prepared for anything that might happen. So it doesn't spook you. It doesn't get you guys kind of going crazy. And obviously, as the market ends, just look at the last minute of trading here, or the last 3 minutes of trading. Actually, no, this is the last minute, actually. Calls, it's nothing but call. $145 strike. 54. So obviously, like I said, they're playing a lot of the options a lot more near the money currently. And that's just the way that it is. So I want to look at the order sentiment here. Let's pull this up actually. And I'm trying to find actually, what am I looking for here? Most active options for the day was this July 9th $50 call. And then on the put side, it was the $40 call, which I think is going to probably end up not paying well for them. I think that they could potentially lose some cash there. So yeah, after looking at the option chain, guys, let's take a look at the dark pool information today that we can see. Again, we only had one large print, which I've already shared with you guys, but let's take a look at the actual overall volume. So 57.9% in the dark pool today. Usually we've been kind of hovering around that $60 level. So we did see about a 3%, 2.9% decrease, 71 million total volume in the dark pool. And again, you guys already know my beliefs on this. It's the biggest attractor in having the squeeze happen now. But also I think of it as a really large shovel as well when it comes to building a bigger grave, right? Like if the market makers are continuing to facilitate engaging in short positions in the dark pool, they're just increasing that amount that they're going to have to cover. They're increasing that amount of naked shorts. And at the end of the day, I think that's better for us. So that being said, I'm going to end the video there. Sorry that I had to redo this, guys. And again, this probably won't get any traction just because that's the way YouTube works. But at the end of the day, that's okay as long as my subscribers understand that I'm just trying to give you guys some valuable information. And I really will not curate too much. If there's nothing to report, I probably won't. I was kind of getting, not slack, but it's actually a term of endearment. People are saying, you need to make more videos, you need to make more videos. And I'm definitely going to work on that. Again, though, I just don't want to make shit up, basically. Like, if there's not too much to report on, you probably are not going to see me making too many videos. But at the end of the day, I appreciate you guys all very much. It does me a huge favor if you're watching this video right now and you're not subscribed. Please do me a big favor. Subscribe, drop a like. It helps my information get spread. It helps me connect with you guys. We do the late night streams, and I obviously love chatting it up with all you guys there. So that being said, I hope you guys enjoy the rest of your day, and I love you long time. Peace.